morning, class. Welcome to Homeroom with Unk and Market Monk. Good afternoon, P. How's your week?
It was really good. I had a couple setups that I'd been working on for a while that took off. Riley, and then once again AVGO 1200 area that went nuts. I didn't get all of it. I got most of it several different days, so that kind of made me a week. And then coin again, just got some great levels there, and then MSTR on Friday. So stuck with ones I was familiar with mostly.
Yeah, definitely for me. Again, trying to set myself up for being out of town. I was surprised. Looking back, how how good the end of the week was. That we actually ended green on Spy. Kind of an inside bar if you look at the weekly chart. But yes, definitely familiar names. For me, still kind of sticking to the weed and crypto. What a time to be alive sector. Just because I'm very familiar with how the moves happened, what to look for on this go around in those sectors. But overall, pretty light week, but surprised with the strength in the market. That's for sure.
Yeah, and then earnings went about half of what I thought would happen. And I was early on thinking Microsoft would probably hold things up a bit, that would be good. Tesla was I stayed away. I wasn't exactly surprised it ran like that. I think the expectations get that low, and that can certainly happen. And then a couple of them just didn't give the bigger moves that seem to be indicated. So just kind of a smaller move off Humana and a couple others, but that's been interesting to follow the earnings.
Yeah, I always try to give that first week of the real, not the first week, because the first week is usually the boring banks and it's kind of thin. But that first real week where it's a full calendar earnings, I kind of like to let the sentiment kind of pan out a little bit, see what kind of reports are being responsive, whether it's guidance or just meeting the expectations, and then kind of attack charts. I know seemed very positive though, because I mean that was last week. It seemed very
Uh,
positive overall.
yes, and sympathy is where it's at. I mean, I will say that the bullish reads in some of the SaaS stocks panned out, like Snow, took off with Google, and Net and DDog did well. So the thing about trading those is you're not getting the goofy implied volatility pumps within the contracts. So they're better. They're really better to trade than the actual stock that's reporting earnings.
Yeah, I gotta ask. I gotta ask why we're here on that. Did you get any of Snap? Did you get some of that?
Oh yeah, I had quite a bit of Snap. It was all shares, but yeah, I had that.
Yeah, I kind of kicked myself in the butt. I mean, the setup was the same. We kind of called the 10 holding. The setup was really similar to Lyft, and I just didn't feel comfortable holding it while I was away. But 40% move. And again, just kind of a clean read from our system of a support resistance level holding and then a play right back to the upper part of the channel supported by the flow read. The whales can't really hide and stuff
I
like that.
I had my finger on the buy button, not the sell button, when they reported because I was ready to buy more if it nuked 30%. I wasn't gonna just stop loss it because I've just seen this with Snap so many times that I was just going to try to average down on the worst possible candle. I didn't exactly expect that with a flow read or anything, but it's just it snapped. So it could do that, even if it just did it for 5 minutes and then bounce back. So I thought it would be more flat on ER. I just thought we'd get through it and kind of grind up, but that was phenomenal for sure.
Yeah, I'm interested in the reread. I mean, it was a Friday report, but I'm interested in the reread we're going to get midweek and if it clears the last high. I mean, because we went right to the level that I have. Again, kind of played the zone of supply and our support and demand, supply and demand there at 1450. It does feel a lot like Lyft to me. You know, where we're going to kind of have I guess the leaps are going to come to fruition
The,
and probably be tested
yeah,
quicker than the dates of the strike.
they're parked in some pretty high strikes. We're talking like 25, 30. Those are for 2026. So what's really going to start to tell the story is everything from January to March of next year. And I think 18 to 22 is kind of where I expect it to go. But yeah, that's one to follow for sure.
Yeah, the 18 last high, so that makes sense. And then once you get above that, you got to start scaling out at least share side, on my opinion, and get your
Yeah.
dollar cost average so low that you can keep them forever, or you're not necessarily going to lose out if there is a higher move there. I was away. Obviously, most people in the room know I was away. Maybe not the freebies that we give this to don't know I was away. But how was the week overall on the what do I want to call it, on the pet peeves of the professor?
So there's one that showed up, and people want to. I wouldn't say they argue with me about it, but they try to explain what they're thinking and doing it, and then I'm just not satisfied with their answer. So it's about trading out of the money.
Yes.
And one thing I realized that a lot of the flow I post is way out of the money. What you have to understand about that is that the whales buying that are prepared for it to go down and for it to go down significantly. And they're playing the other side and they're hedged and they just kind of don't care because they might have that final destination in mind. Like it's going to go up here. We can move it there when we want to or whatever. Also, within option flow right now, you have a situation where there is a possibility of a drop in SPY to 480 or below, and that whales are positioned for that too. So, like that, the contracts that they're buying from September through next March now that are way out of the money, the market might not go straight up to that. I mean, they're prepared for a drop and then a pretty steep reversal and recovery. Do you really want to hold a contract through all of that um, when you're going to go down 40% or something like that? And the thing is, if you want to hold something like that, you want to swing it, you get close to the money or in the money for the cheaper stuff, and then you can weather that. The options calculator stays favorable for you. Once you get on the wrong side of that with the out of the money stuff, you're in Mara 50C or something stupid like that. Um, it's harder to recover. You can't average it down because the percentage of success is so low that that's not really going to do anything for you. And then the recovery in the stock, if it gets back to where you bought it, you're still going to be red because that's how options work. So it's just completely foolish to do that. And I'm not saying I want everyone to do everything I say, but I know what I'm talking about when it comes to how options move. And when I say it's just a really bad idea, like the stock isn't a bad idea. The entries maybe not a bad idea, but why the hell are you so far out of the money? Why are you buying a strike they just opened on something that's up 30% already? That's just not a good idea. And I just don't want to see our room do that when there are so many better setups. Even option side, you want to take risk, you want to go to the moon. I said AVGO 1200. It's 1350 in a week. That's 150 points in a big stock. Like you want risk, look for those stocks I don't shut up about like that. But don't go buying something way the hell out of the money because it's cheaper. That's just not a good way to trade.
Yeah, it's kind of, there's a couple things that from the cheap seats over here that really stand out when you talk about that, and you do talk about it regularly. One of the things I won't say it's a table pound, maybe a table tap, but your good entry on, I don't care if it's share side or option side, is going to be a red candle. Um,
Yeah.
but expecting to buy, I don't know which stock we want to use now, but expecting something that drops, let's say, from like 13 to $11, and then buying a $20 contract, that just seems like you're not going to get the movement on there. And I've watch list contracts on several stocks, let's say like a $4 stock. I've watch list the fives, the sevens, and the tens on the contract, all the same expiration date, just to kind of get a feel what's going on over there. And I tell you what, the one that's closer moves a lot more. That top one
Yeah.
barely moves. So I think the better play overall in general is buying that red candle. And you can critique this as best possible, but buying that red candle, but your strike needs to be in a price that it was just at. I think that's the better setup for any play. Is that if Mara is a great one because we can spitball that, but when we have 17 as a level and it gets below that, buying the red candle and then start scaling into 17s, that seems like the better play than buying 25s.
Absolutely. And two examples. Tilray is a good example. I post flow on Tilray that's 4.5 or 5C. You don't want to buy those though. You want 2C with as much time as you feel like buying. 6 months because they're so cheap. 6 months, even a year. You know, buy that. There's a high probability it's going to go to 2. It can go to 4. It will eventually, but it can go. It might go to 220 and then back to 180, and then 250 and back to 180. Like it might just keep doing this. And if you're going to be in that kind of trade, 2C is where you want to be because you're gonna bring it in the money while it goes to 212, 220, whatever. And so that's where you want to be. Coin 220 has emerged as a level
Yes.
that's been pretty good. I buy below that, but you don't want to buy 300C or 280C when it's there. I want where I think it might go, 230, 235 maybe. 240 if you buy the extra time is fine. But you don't go 100 points out of the money on coin just because the strike is cheaper up there. It's not going to have the volume coming in. It's not going to have that activity. It's harder to get out. The spread's going to be worse. Everything about it is worse. So there's just no reason to do that. If the stock options are too expensive, you got to trade something cheaper. Then there are plenty of them. So
So
uh,
just to go
no
back to
shortcuts.
just to go back to that Mara example, just because I know the chart pretty well. If you waited, and if you set an alert at 17 and it broke down, and even if you got in early on this one day before it bottomed out at like $16, you bought some 17s. Um, would this flush down to 15 be a significant amount of that contract, like 20 or 30% of that contract, or like if you bought a month out? And then the other question on that would be, if you did just hold on Diamond's hand and we got up to 19, would you be back above your original entry?
So the answer is the percentage loss is worse the further out of the money it is. And no, you would not. You would not. You'd be close, but you'd go down 40%, and right now you'd be down 15%.
On a 17 strike,
Yeah.
even though it's $2 in the money?
Oh no, no, I'm sorry. No, I thought you were saying the out of the money stuff.
No, no,
No,
no, no, no. No, I'm saying
so
it. So it broke 17. You
right.
bought the first day. You kind of got in too early when it was at
Mhm.
16. It bottomed out at 14 for 3 days. But let's say you at that point in time you bought like a month out. So the total trade currently would be like 9 days. So you'd still have like 2 weeks left, 9 trading days. So you still have like two
Yeah.
weeks left. But you bought at 16. It bottomed out at 14. It's now 19. What would be your percentage that you lost in those 3 days that you were probably panicking? And what would be your gain now? I mean, roughly. I know it's hard for you to put exact figures on it,
Yeah.
but
It would be the loss on something that at the money like that would be around 20%. Green slightly right now. So it would be like 3 to 5% up.
okay, okay.
Yeah.
It just seems like that's a safer way to play, though, is to find a pivot or a level on anything, and then maybe start scaling in underneath the pivot and giving yourself some time. Especially if I use Bitcoin because we have catalysts for it. It's real easy to watch, Bitcoin, and the volatility on these moves right now it's tremendous.
So Mara has unfavorable Greeks on it overall because it's a crypto stock and that's pretty common. But just as an example, if you buy Mara now at it's 19C, so that's in the money. If it's flat this week, you're down 15% on Friday
Okay.
for June. This is for June 21st. So several months out. If it's flat, you're down 15%. So you have to keep that in mind about options. So that's not even if it's red. If it just closes the week exactly right here, you need to get to $20.50 to keep your head above water, and you need to get to like 21, 22 to really make some money on this trade.
So there's more favorable setups than
Much more, yeah.
like a CLSK or a coin from the option side. So that's probably more important is to knowing how again how it moves and how it would move in your favor.
There's two kinds of crypto options I like. One where I'm like, this is going to move today, and it's going to be coin or MSTR. And then there's ones where like I'm going to buy 6 months or a year, and it's going to be like in the money or close to it. So and that's CLSK or IREN, um, and they're better than Riot has been really. So probably those two and maybe Wolf, and Mara, Riot, their share trades to me.
Perfect. So yeah, it comes back to kind of knowing, learning the actual, not only knowing the stock, but knowing how the contracts move. I mean, I know it sounds super simple, but that seems like most important, especially on these volatile names. I guess it would be the the Greeks are cooked, so to speak. Is that how you'd say that?
Yes, yeah. They're favorable to the seller rather than the buyer on the options. And I mean,
That's
options tend to be that way anyway. So when you get the Greeks kind of stacked against you, it gets even harder. So I don't know the gambling equivalent, but like I'm sure some games have worse odds than others, and so you probably want to go to the game with the better odds. Um, you know, or sports games, sports betting. Just pick the team that's going to win. Don't try to pick how many, assists the
or how many
backup
points? Yeah,
small forward is going to get or something.
yeah, yeah. Just pick the yeah. Keep it simple, stupid on that. I got you on that.
Yeah.
I wanted to ask you, and I've been wanting to ask you for a bit, and I think it's important since we're in these earnings seasons, and you do see a lot of activity regardless around contracts going into earnings. I mean, it's obvious with when you start calling stuff that we haven't talked about in 6 months, and then it's because it has earnings in 2 weeks. But
Yeah.
how hard is it to determine what I call free money flow on your end, or is it something you kind of even take into account?
Um, I do take it into account, and I've learned over time that weeklies are fairly useless for earnings. Even the next week is pretty sketchy on those. But it's things like a month out or 2 months out that I can tell retail hasn't noticed or doesn't care about that they're not buying. If Okay, so like LLY, I've been on that a long time. I caught a major move on earnings on that before, and once again, like I'm seeing 1,000 C for the summer. I'm not saying it's going to go to 1,000 at all, but that's a whale who bought that because they bought so many of them, and it's a strike that's just kind of out of the notice of people. If I see a read on something like ADP or Paycom, nobody even knows what those stocks really are or care about them. So I can usually find something there. But whales kind of gamble too. So I just try to look for the cleanest read that I can, and the only ones I really tend to like are ones that are close to a level of ours going into it. Whether it's support or resistance, whatever. If it's at the top of a channel and puts come in, I mean, that's a pretty clear sign too. So I just try to do as many extra checks as I can on those.
So I guess um, if it's not one buyer or one purchase, as you say, a whale buying it, if it's like retail or a bunch of buys, that carries less weight as to direction. Would that be accurate?
Uh, yes, yeah, and it also like these earnings positions. The closer it is to earnings, the more useless it is. I try to spot it weeks ahead of time. I thought Microsoft was bullish on earnings well ahead of when it actually
Sure.
happened. Uh, Facebook, I did see some puts on Facebook. It went way farther than I think they even thought. It was about 470 was about it. Um, that, while it was a pretty big move, isn't worth really trading. Those contracts were over $1,000, so I didn't really, even pay that much attention to it. And I think what happens with earnings is people see, and this has happened with Facebook several times, that both directions. Oh man, I would have bought that $30 contract. That was $800, and so then they'll buy $30 contracts on the next big stock and get IV crushed, and nothing happens. So yeah, you can you just want to light your money on fire and buy that way out of the money. Weeklies, you can do that, but there are better earning setups where you're not going to wake up at zero, and those are the ones I try to mostly talk about.
Yeah, so it really, I mean, it's probably it sounds simple to me and probably sounds real simple to you, but I think I have to say here is a lot of people that read flow. They just look at the overall volume and that buy to open, sell to close, that kind of stuff is really
Yeah.
important. It's really important in what's really going on in the option world.
Yeah, absolutely. You never hear me say the phrase like, "Oh, they bought this above ask." Uh, and none of that really means a whole hell of a lot to me. The ask side flow matters, but getting into that as kind of the be all end all isn't really how you read flow successfully. And people are really terrible at filtering out noise, and that's even for people who make that site, in my opinion. Like I just see them post, and a lot of what they post is late. A lot of what they post is like they're like a reporter, someone new, and then after the fact. Well, I want to know before, because that's how you trade. So that's what my
Yes.
whole setup is all about.
Yeah, if one thing that we've established through our relationship, no matter what, we're always going to be early. I mean, that's just
Yeah.
something I think we both live by and we both use to our advantage. Lyft and Snapchat really stand out for um, examples of that because, I mean, the flow was crazy before ER, and just the moves just happened to happen around ER. So that really stands out to me. I will say that I watch other flow readers, not not for information, just for more um, shits and giggles, to be honest. But it seems like they only care about how much volume, and they kind of stop there on the surface instead of actually dissecting what that volume really is. And I think that's one of the things that you're hugely different at is it doesn't matter how many contracts, it matters what kind they are and where they're coming from.
Yeah, and I mean it's all relative. Someone buying 20 contracts on something can be hugely significant, depending on the strike, the catalyst, all everything. I mean, when we are on uranium, it's actually usually not $1 million buyers in CCJ that tell me what's going to happen with uranium. It's UUUU and UEC, the strikes they're picking, and the time and what the commodity's doing at the time, like all that together. So there's a much bigger picture that people don't take the time to read, or that they don't know it's important. All of that. I got into it today with people on Riley, and I was posting something positive about Riley, that we had a great entry on it, and clear as day it was going to go to 25. Went well beyond that, as those kind of stocks sometimes do. And people are trying to tell me buying it at $35 is a great entry because of how much short interest it has. That's just not how it works in my experience. I would rather be in Riley when we bought it, keep what I want to keep, and we'll see where it goes from here, rather than starting a position up here thinking it's going to go to $100.
CLSK 15 mentioned, same thing.
Yeah,
I couldn't
right.
agree.
Yeah.
I couldn't agree more with that. I mean, that's just how I trade in general. I want to be cheap and early. It's more of a protection for me, and I think on the option side, you not only have to be cheap and early, but you have to finesse your timing a little bit as well, sizing and timing. So makes total sense.
Yeah, and I re-enter plenty of stuff after it goes higher. I mean, I still trade coin all the time. We were in that a long time ago when it was much cheaper, but it has to prove itself, and it starts with these kind of option driven levels, and then the more time goes by, your levels start to emerge, and then there we go. I think with coin right now, it's probably got to go down to 180 or something like that, probably for your levels to be relevant, unless it stays up here long enough,
Long
and
enough.
then
Yep.
your levels start to move up too. So,
Yeah, like
um,
CLSK, I said a couple weeks ago, I was putting 6 8 grand into that thing back when we first started trading it. I will not buy more than 100 shares off weekly wicks. Don't search the group. Um, Now it's still a $400 or $500 trade. It's not the $7 or $8,000 trade, but it's you just kind of like how it moves, the stock, but you don't keep your risk the same when you're this high up because it can have bad news or a bad Bitcoin weekend, and you're just gonna be giving back way too much of the your pool or your basket that you've made off of it.
yeah, and AVGO under 920. I put 5 grand in that. Some of that was shares. I don't buy shares up here. I did buy one under 1220 because I'm trying to get 10,
Yep.
but it's not really a trade. Like that's just a strategy for when it splits. But my positions now up here, one or two contracts. That's it. Uh, I was doing 10, at times back when it was, at our spots. But yeah, still like to trade it. Still could read it, but as risk goes up, my position sizing
Goes down. Yep.
goes down. And we're going to be trading a lot of China in the next month, I think. China sizing to me is just a thing. Anytime I trade China, I trade it way smaller than I trade other stuff, like 1/4 a position, just because, for one thing, you're almost in a 24-hour market with China because of the time zone difference and the government intervention thing is always on my mind as
Yes,
well.
that makes sense. Little pivot here to just overall market stuff off the option contracts. I said it was SPY a little bit ago. I'm not going to get into our numbers yet, but kind of had a full retrace of the drop, not necessarily in SPY, but in a lot of stocks. But it's still sideways action. It looks like. I mean, not that we got oversold or anything like that, but we just had checked down into a lower range. Um,
Yeah.
what are you seeing? Is that going to be a prolonged thing where we do that for a few weeks, or is the overall noise still kind of down?
Well, to me, in stocks I follow, what I see is we've had the full retrace, and now big test is coming up. And I'll just use AVGO as an example because it's the clearest one to me. Less noise than in Nvidia, and it's in the most important sector, you know, for tech is semiconductors. So it's just in a range. It's a huge range, but it's 1,200 to 1,400.
Okay.
Until it breaks 1,400 and keeps it, we're sideways. We're not breaking any new ground until that happens. Nvidia has numbers like that too, and I'm seeing a tentative move by whales to position us for that breakout, but they're really not quite sticking their neck out for it yet. So I think it's very much in the air whether that happens. The breakout to the upside is more likely than the big breakdown to me, just from what I see. But after we do break some of these levels, they could pull us right back, and that could be kind of a big resistance, and then we're right back down. So that's just how I see it right now, and I think the spy read matches that too, which we'll talk about.
I think the best thing I can add to that with the ABGO, which I don't trade, is that you're a fool if you're buying it above 1300 at this point in time. You just wait for the 1200, and then you keep your stop loss under the weekly wicks over the last 6 weeks. I mean,
Yeah.
that's how you have to start reading charts. That's how you limit risk, um, and you can maximize profit in a tight range like that. I had 1350 on it, not 14, but I'm sure your 1400 is more of an option driven level than a team
Yes.
level. Yeah.
Yeah, and this is, I mean, I couldn't say it better because my upside right now is $50. My downside's 150
$50.
bucks.
Yeah, yeah.
Like, which side of that do you want to be on? So I might trade it. I'm probably going to trade puts on it. Is what I envision happening. If it has an early pop in the morning, catch that first pullback, and then a lot of times that pullback will keep going. This is what happens with that one. So, yeah.
I haven't said it in a while, but it's something I just kind of, I don't know if it's a, I don't want to say psychotic, but there's probably a better word. But if you're not in a trade, how are you not a fan of it pulling back? Like, just keep getting cheaper for me, please. I mean, if you're
Yeah.
not in the trade currently, you want that. You want it to show a decent range, and then you want it to pull back, maybe even get a little oversold. And this is a mindset I have to have. Like, let's get this cheaper. What I want to change my mind, at least on share side, is volume, more activity coming into the stock. But you get people that want that confirmation, and it's like, okay, well, we just ran $150 on this thing. It's time to buy. And you need to have them other mindset. You need to be like, how cheap can I get this? How cheap can I get this? And it just kind of, for me, that's the best way to minimize your risk on most plays, especially if you're just going to day trade, 15-minute trade, or short-term swing trade anything.
I mean, it would feel like Christmas if MSTR dropped to $800. Whatever, do an offering, Bitcoin have a horrible week, whatever. I mean, I would love that. It'd be much easier to trade down there. I could buy shares again. Like there's so much that would open up there. And it's not even that, like, I don't regret what I sold. SMCI was the same way. I sold it at $1,000. It went above that, and then it went way below that. I would love for that to dip huge on ER. Uh, Cheaper contracts, popular stock, dip buyers, like all that stuff. It's very hard to buy, especially a technology stock that just keeps kind of endlessly grinding up, and up 2%, up 1.5%, up 2%, like every day. Uh, that gets harder and harder to trade for sure.
Yeah, for me, the one that stands out, and I got it on the screen right now, is Nvidia. I mean, I sold that around earnings, mid 700s. I don't do the math just for my psychological well being on what I could have had if I would just diamond handed that position. It was enough to fill my cup. I haven't really said it a lot, that because I don't want to be in the mindset here also of that it made my year. But trust me, my year's really good because of where I sold Nvidia at. And we were at my exit like 2 weeks ago. We really were, and I haven't really thought about re-entering that because I have a lower level that I want Nvidia at, or I just won't
Yeah.
trade it. I just won't trade it. Like, it has to reset up for me to be comfortable. And I think that FOMO, or I didn't call the top, gets in a lot of people's psychological mind, and you just got to kind of move on from it and find the next best setup, in my opinion. And it'll help you in the long run not stay in something too long or give back what you've already made.
Yeah, absolutely. I had MDB under $200, and then 220. Uh, Sold most of mine at 380, and then I started trading around 380. That got to $500. No interest in it whatsoever up there. After earnings and after it dipped back under 380, like, yeah, I'm more interested in it again. I would have preferred it fell to 285. I think that still might happen, but yeah, I just move on. And um, I've gotten better about that. Like, I would, John Deere, and you've steered me away a couple times. when that was, over 400. We're pretty tough to trade that over 400 and get much out of it because your top end is in the 430s right now. But your downside is under 380. So like you're 50-50,
Yeah.
not where I want to be. So I've learned that too. Definitely something I pick up.
It's funny. I mean, not to talk about it at all, but it's funny you mentioned MDB because it was on the fence, and the check was Professor's first on this one.
Yeah.
I mean, because I got that 377 11 level, which is, I mean, 380 is your level. We're right there together, like we always are. But the reason usually comes from your end, not mine. It's not something I found. It's not a shitty penny. It's not one of them, $3, $5, $10 stocks that I'm very familiar with. But it's funny that we're kind of both in that. I'm watching it, but
Yeah.
I need it to be cheaper or have the proper reasons to trade it.
Well, one of the things with that one, the SaaS stocks get these sympathy pumps on Google and Amazon. Those
Yeah.
usually don't last. So what I'm waiting is for Amazon earnings to be over with, figure out what it's going to do from there, and then really solid read will emerge approaching its earnings. Yeah, it's definitely on my radar for sure.
Interesting. I want to keep this one good today. Let's go into spy a little bit. Um,
Yeah.
kind of a. I know we had a. I don't know if it was a miscommunication, but it seemed like a difference in opinion before I left on just what we were seeing. Did you see Spy getting up here at the end of the week, or was that kind of a shock to you?
It was a shock that it recovered from a spot that was already so high, like that it didn't dip more and then recover. Like
Okay.
so,
Yeah.
I thought that Mike, like while you were gone, I posted for several days that like I think that they're going to run it up with Microsoft and save the day. That was my thing. But the thing was, the day didn't really need saving because it didn't because Facebook didn't really do much to it. It kind of recovered right away from that, and so that surprised me that we didn't dip more and then bounce back.
Yeah, I think we're on the same page there. But that's kind of what sold me that all right, this could probably go higher than I anticipated through the week because we held like let's just call it like 500 was really strong, and then the volume I seen coming in off some, you know, the low expectation reports being met kind of was like okay, we could have a decent week, and I think it was like Tuesday or somewhere around there. I'm trying to find the comment in chat right now, but that kind of told me that all right, we're not just gonna die here.
Yeah.
Overall, usually I'm not first on that. I can't find that comment though.
No, and for me, like I did my updated sector notes and all that, and I hopped in with like I was bullish on restaurants in the middle of the week, and then I did one on SaaS. So yeah, I didn't have a lot of bearish reads after Facebook. I posted some scenarios of what could go down, but yeah, no. Overall, I was still pretty bullish in most notes after that.
So we 495 on the downside, and I was way lower than you. I had a big range last week. I was 82, you were 85. I think we just both said it. We were shocked it didn't get down there, and when it did dip, it didn't stay long. We were a buck off, 505, 506 on the top side. Um, so yeah, but still inside bar. Going forward, I'm still a sideways guy. I don't know about you. I don't know what you're seeing over there on the flow, but I'm still a sideways guy until um, we have a reason to kind of have that big dip.
So the flow on 517 500p, which is what led me to think that we would dip when we were at all time highs. Like there was that contract waking up. That is flipped strongly to the bid side. A lot of that is selling the close, but they're just also selling it. So that tells me that dips under 500 are not going to last very long right now until that changes. And a month later, there isn't really that set up to 480, 470. like I was seeing now. So
Wow. Okay.
yeah, I think we're pretty good shape at the moment.
So even the 490s on your end doesn't they're not looking like they're gonna last.
No, I don't think they will.
Wow. Wow. All right, I'm gonna make you go first on some numbers just because you're more educated than me right now. Just because I
Yeah.
haven't been on screens. I mean, and it's something I want. I try to get it across a little bit and read the room, but I'll double down on the point here. Like, if you have your setup or your style or just your checks and balances, what you do every day, and you get away from that, you need to give yourself some warm up swings before you just start talking out your ass. And I try to avoid that. I don't call shots just to call shots and hope something sticks. And this week, I'm definitely less informed than you. So yeah, I'm going to use your information a little bit to my advantage here.
So I'm gonna say 499.09 is gonna be
Oh,
my downside,
okay. I see what you're doing.
and I'm going 512
Flat? Or you got some change for
flat.
the. Okay.
Oh,
512.
we'll say 04, 512.04.
Oh, 04. That's a big deal here, sir. To the penny.
Yes.
I do have this 517.90 on my 1 hour, um, which I like. I like where you went on the 500, but I don't want to quite like match you. So I'm gonna look at that weekly bar, and so I'm gonna go 496 to the downside. Oh wait. I'm gonna go the other way. I'm gonna go a little bullish here. I'm gonna go 502.25 to my downside, and then I'm gonna take this 517.90 because it's a level I have to the upside. There's just a lot of ERs this week. I think people want to be in stocks. We know the rates aren't gonna get cut. So I don't think that I think the market's going to shake that off, even if there is a little pullback. I think the individual sector notes that I touched on, or individual sector, um, like the jobless claims, the mortgage news, I think that's going to be more volatile to the market, but I don't think it's going to affect SPY as much as it will the individual sectors.
Yeah, I like it. So for what you're saying to happen, which very well could, you're looking at a pretty big beat by AMD and Amazon, probably. That would be what would do it.
Sure.
And sure, I mean, especially Amazon, they've been really good, and they do things that the market likes right now. So I'm with you there.
Yeah, I think our downside numbers this week are the most important. I mean, if we don't break 500, if we do stay there 501, 502, like I'm saying, 517 is totally possible. If we do get below that 510, 512 is probably the top. Just because of the how much you have to travel throughout the week. That's a big gain. Still would
Yeah,
be
and so 1% day on SPY is pretty huge. So
yeah.
you do the math on that. Yeah, absolutely.
Still kind of inside bar, not necessarily from last week, but from that big drop. Um, 515, 493. I think we figured that range out for the next 3 or 4 weeks, to be honest with you. I don't know if that's what you're seeing, but sideways kind of kills a lot of people that don't know what they're doing, and the market loves to do that.
Options in particular, it's bad. Yeah.
Yeah, 100%.
How much do you care about VIX? Do you care about VIX at all?
No, the
Okay.
volatility thing?
Yeah.
No,
Twitter
no.
loves to talk about that.
Yeah.
Um, I don't try to reflow on it or do anything.
Yeah, no, that doesn't do anything for me. Just because the market in general is more fragmented than that for that to be an indicator. I mean, we can have a great week in crypto and weed and a shitty week in tech, right? Like you just got to
Yep.
swim in the proper pools. Um, and I think what we do kind of identifies that in general, where you're gonna have not only the volatility or action, but you're gonna have upward momentum. And the VIX is an overall read, and yeah, it's too I guess it's too vanilla for me. It's too broad to I mean, because it could be in the dirt, but you could have a great week in crypto, right? So I mean, what's that really do for you?
Yeah, exactly. It's I think intraday can have some significance, especially trading SPY. Like, you get a big spike in the VIX, you better close your calls out. But I mean, other than that, like TA on it is useless. I made that a bingo spot on my FinTwit bingo thing for the TA on VIX. But I would still say overall, don't chase puts is probably my most important piece of wisdom. And the reason for that is a trend day down is still very rare. We get maybe one a month lately. So we get a big gap down pre-market. Like, where do you think you're going to take these stocks? If Microsoft is down 3% pre-market, where do you think it's going to close? 6%? I mean, anyone launching missiles or something? I mean, there's no, it just doesn't happen. So you miss the move down. Who cares? Trade the upside or sit on your hands, whatever. But chasing puts is a disaster, and I just don't want to see people in here doing that.
You've been pounding the table on that too, probably here for the last month. So there's no reason for
Yeah,
it if you're paying attention.
yeah,
You probably think I don't only trade shares if you haven't heard that from the professor.
right,
Um,
right.
I do want to say, because you kind of mentioned it, but you mentioned it in a smart way where it wasn't like plain and simple. So I'm going to say it, and then you can maybe correct it or elaborate it as a last point. But
Yeah,
the VIX thing on Twitter is because those guys are trading SPY, and VIX is probably really relevant to ETF trades, which we're not really ETF traders. Pac does an amazing job with that. Goose does an amazing job at 15-minute trading those. But in general, that's not what we're focused on is ETF trades. Where those Twitter guys, they just live off the 0.5% move on SPY, picking a side and flipping a coin. So I can see
yeah,
how it's relevant to them, but it's not relevant to what we do. And you're not going to find a 40% move in an ETF like we do in a Snapchat or a Lyft or a CLSK or something like that.
yeah. Well said. I agree.
Perfect. Like, subscribe, all that for more.
Yes, sir.
All right, let's get to work, P.
Yep.